Hello everyone, welcome to another session on dollar INR. This time we are going to with crude and then we'll come to dollar INR. Okay, now we have been following this chart for a while. We saw this support getting held, the levels around 70, 75, and there's again a big flare up in the Middle East. The prices have jumped and gone higher again, and it is trading around 88 to $89. This is Brent crude. Okay, now hopefully this trend line which is connecting the previous peaks around here in May, that is typically it should get resisted here around that 88, 89, 90 mark. Okay, but again heavily depending upon what happens in the Middle East. If there is some cool off, then crude should resist here, Brent prices should resist here and come down, hopefully for the best for everyone and also for dollar INR. Okay, now let's come back to our dollar chart, what we follow very regularly. Okay, I want to show you two specific moving averages on this dollar chart. Okay, now the first moving average is this 25-day, which is this blue line. Okay, 25-day moving average. Now this orange line is the 1% filter above the moving average. Okay, just like you have filters below the moving average giving you dollar buy signals, you have a percentage filter above the moving average which gives you dollar sell signals. Okay, so we have been following this orange line quite a bit. Okay, and it typically gives decent sell signals. Currently the current spot price is just above this orange line. Okay, 25-day moving average plus 1% filter, the current price is slightly above that orange line. Okay, now let me come to another moving average, which is the next standard 50-day moving average. Okay, same on the daily chart, 50-day moving average, and that is this blue line. Okay, obviously longer period, which means moving more slower. 25-day will be more volatile, this will be more slow moving, and we have this yellow line which is the 1% filter above the 50-day moving average. Okay, and if you look at this yellow line also, okay, the current prices are just around that yellow line. Okay, now what does that mean? That means that both 25-day moving average plus 1% filter, 50-day moving average plus 1% filter, the current prices are above both these signals. Okay, remember one more thing, last time when rupee was weakening like this, it had touched this all time high which was around 96.97 in the onshore prices. Okay, now we are close to 96.50. Okay, so this region of 96, 80, 90, close to 97, that will act as a resistance because it was the previous all time high. Okay, and now we are close to around 96, 30, 50. Looking at the moving averages, again looking at the all time high resistance, I think this is a decent time for dollar exporters to hedge their receivables. Okay, dollar exporters have been waiting for quite a while. It had come down to 94, 94.10. Now it is back to 96, 30, 40, 50. I think dollar exporters should look to hedge. Okay, hedge using both vanilla options as well as forwards. Option premiums are relatively still cheaper, so you should certainly look to hedge using vanilla options. Okay, now dollar importers, since the spot is so high, should use vanilla options to hedge. There is no point locking such high spot prices, and you also have a 3% forward premium. So dollar importers should hedge more using vanilla options, and dollar exporters should use both vanilla options as well as simple forwards to hedge. Okay, so that is it from my side. Have a great evening ahead.